All right, welcome. Today, we are completely flipping the script on investing. I want you to forget, just for a moment, about chasing those crazy explosive returns. Instead, we're going to build a playbook, and it's all focused on the single most important and honestly the most overlooked part of building long-term wealth: survival.
So let's just start with this question right here. Think about it. Our entire culture is obsessed with stories of people hitting it big, right? The overnight successes. But the real legends of investing, the ones who are still standing after decades of turmoil, they are masters of not losing. They're playing a totally different game, and that's the game we're going to learn today.
So here's our first big idea, and it is a complete mindset shift. Before you even think about the potential upside of an investment, you have to become obsessed with the downside. I know, it sounds a little backwards, but protecting what you already have, well, that's the only reliable foundation for actually growing it.
And this is where your role changes. You're not just a stock picker anymore, hoping you bought the right lottery ticket. No, you become a system architect. You are literally designing a machine that can take a punch, that can keep functioning and generating income through the tough economic winters, not just during the easy, sunny summers.
Okay, this might be the most important distinction in all of finance. Seriously, volatility is just noise. It's the market's mood swings. Yeah, it's scary to watch your portfolio drop 20%, but it's temporary. The real risk, the one that should keep you up at night, is a permanent loss of capital. That's when your money is just gone. It evaporates, and it's never coming back. Mixing these two up is an absolute recipe for disaster.
All right, so if we're going to be architects, we need a blueprint, right? So this next part gives us the rules for building that resilient system. And it all starts with allocation. Trust me, how you slice the pie is everything.
Just let that sink in for a second. You could have the best, most brilliant investment idea in the world. But if you bet the farm on it, if you allocate way too much and it just hits a rough patch, you could be forced to sell at the absolute worst time and get totally wiped out. Position sizing isn't just some fancy tactic. It is your #1 survival tool.
So how do we actually do this? How do we put it into practice? Well, we use a really simple but incredibly powerful framework. It's called the core satellite approach. The easiest way to think about it is like a barbell. On one end, you've got your unshakable fortress, and on the other, you've got your nimble explorers.
And this breaks it down perfectly. You see, there are two totally different jobs inside your portfolio. Your core, that big slice, is the bedrock. It is built to last. It's designed for stability and making sure you're around for the long haul. That's what ensures you stay in the game. Now, your satellite portion, that's where you can take some calculated, intelligent risks for that extra growth. The core makes sure you survive. The satellite gives you the chance to thrive.
So we have our allocation rules down, but what do we actually build the fortress with? Well, this brings us to a really crucial concept, which is what true diversification actually looks like.
You know, most people think diversification just means owning stocks from a few different industries. That's just not enough. Think about it. If the entire U.S. economy hits a snag, all those stocks are going to move together. True diversification means owning pieces of different economic engines all around the world that are marching to the beat of completely different drums.
And here's just a quick example of what that might look like. You might have exposure to the U.S. for its stability and massive scale. Then you have emerging markets for their raw growth potential, maybe a specific country like India for its unique demographic story. And then you throw in alternatives like real estate to protect against a totally different kind of risk, like inflation. See? Each piece is doing a different job. Okay, this is the part that everybody fears, right? The crash, the storm. But here's the thing. If you have built your system correctly, a downturn isn't a catastrophe. It's really just a test of your architecture. And maybe, just maybe, it's an opportunity.
First things first, let's get this out of the way. Just stop trying. The smartest people in the world, with the fastest computers you can imagine, cannot consistently predict market tops and bottoms. It can't be done. And accepting that simple fact, well, it frees you from playing the single most destructive game an investor can possibly play.
And that leads us right to the second harsh truth. Look, anyone can get lucky picking a winning stock when the whole market is going up. That's the easy part. The real durable skill, the thing that separates the amateurs from the pros, is managing risk. It's the defense, not the offense, that wins championships over the long run.
So, the key is to avoid these common traps. Chasing momentum without any kind of plan. Believing that today's hot sector is going to be hot forever. ignoring the slow, silent drain of fees. These are the unforced arrows that just destroy portfolios. The reality is that defense, diversification, and discipline are what actually work.
So when that storm eventually hits, here is your playbook. It's simple. You do not sell in a panic. You rebalance. You sell what's held up and you buy what's been beaten down. You start to see a 30% drop not as a disaster, but as a 30% off sale. And you always, always, always keep some cash, some dry powder, ready to deploy when everybody else is freaking out.
Now we get to my favorite part. Because this isn't just about money. This entire framework of survival and allocation and risk management, it's a universal principle for making smart decisions in pretty much any complex system you can think of.
Just think about it for a second. You can apply that core satellite logic to how you allocate your time and your energy. You can use risk control in your career by always defining the worst-case scenario before you take a new job. And you can diversify your life by building multiple income streams, new skills, and strong relationships. It's basically a mental model for resilience.
And this brings it all together into one simple tool. Before any major decision, financial or otherwise, just run through this checklist. What am I trying to achieve here? What's my absolute pain threshold? What part of this is my safe, core bet? Where am I taking a smart, calculated risk? And finally, what's my emergency plan if everything goes completely wrong?
And really, that's the key takeaway from all of this. True, lasting wealth is not a frantic sprint for the highest returns. It's a marathon of survival. It's all about building a system that's so resilient that you can simply stay in the game year after year and let the incredible, unbelievable power of compounding do all the heavy lifting for you. The real question isn't how to get rich quick, it's how to make sure you never, ever have to stop playing.